Thank you for standing by and welcome to the Podium Minerals Limited shareholder webinar. I would now like to hand the conference over to Mr. Rod Baxter, Chairman and Interim CEO. Please go ahead.
Thank you very much and good morning everybody. My name's Rod Baxter and welcome to our webinar. We want to thank all of you that have joined us. We're always very excited to talk about this business and we're very grateful for you taking the time to join us. This will be recorded as well, so if you miss anything during the course of the webinar or you want to go back and reference anything, or alternatively just want to let other people know, it'll be on our website in about a day or so's time. So you can see in front of you there the photograph which is on our annual report, and it's one that I absolutely love. I think largely because firstly I just love the colours of the ground that's in and around the location where Parkes Reef is located, which is about 380 kilometres east of Geraldton in the Midwest region of West Australia. Beautiful, beautiful location, a rich mining history there, and of course the colours are great. The other thing of course about this photograph is it actually shows the transition of the ore body through one of our RC drilling campaigns, and you can read the colours from right to left on that picture. So the brown colours as we're going through the oxidized layer, then you get into the greys, the three berms of the greys, which is the sort of 15 or 20 metre width of the mineralized zone, and then you get through the footwall into the host rock, which is the black stuff, which is the ultramafics down below. So a beautiful picture, and it just gives you a feel for what it looks like in and around the environment of Parkes Reef. The next slide is just important notices. We'll let you read those in your own time and at leisure. So the first real slide of the presentation is this first one here, and if there was only one or two slides or maybe three slides that you were going to focus on, I'd like it to be this one to be one of those group. Yeah, this is a business that over the last year to year and a half has made some amazing strides in terms of understanding the ore body and in progressing towards a metallurgical process to extract the 8 payable metals from the ore body. And as a board, when we think about the company, we tend to think about it in terms of 5 different interconnected levels and interrelated levels: the asset level, the project level, the market. We spend a lot of time understanding the market, the product level, and then of course the people and strategy. And we have followed those 5 themes throughout this presentation. So hopefully as we go through it, you'll see me touch onto those 5 buckets. And that's present here on this first page. So, you know, when I talk about the asset level, I'm talking about this low-risk jurisdiction location of the Parkes Reef project. This 15 kilometres of strike length with massive size and scale, with a 6 million ounce resource right now to 250 meters. So the resource has been defined down to 250 meters, but we have a lot of evidence through drilling and through further work that we've been announcing over the course of the last year or so, that this ore body very likely extends a lot deeper, at least to 500 meters, and we feel well over to 2 kilometers. So huge amount of scale and huge amount of size. At the project level, a lot of work has been done in towards defining these 8 payable metals and the nature of the ore body, and also in defining what we call our metallurgical pathway, which is really the framework flow sheet that we've announced on how we're going to extract those metals. And the focus for next year is going to be on further enhancing that flow sheet. At the market level, the prices are currently disrupted. Prices are down, they're at historic lows, and margins are at historic lows in this industry. And it's a combination of a number of very macro global events that are playing themselves out, which we understand, which the industry understands. The main issue for us, of course, is that demand is underpinned by the current uses, and it will be underpinned by current uses going forward for quite a long time. But most importantly and most exciting for us is this enormous upside through green hydrogen, and platinum in particular, along with iridium, have a key role to play in the green hydrogen economy, which we'll talk about a little bit later. So yes, the market is disrupted, but it is the events are playing themselves out, and there will be a price turn at some point, and we'll give you some evidence of that. At the product level, 8 payable metals in Podium's basket. That's absolutely critical, and we feel that's a competitive advantage. And it's all about making sure that we align the recoveries of those metals to the global market outlook going forward. And of course, at the strategy level, it's the most important. This is a very small but experienced team, deep industry knowledge, motivated and aligned to shareholder outcomes, and most importantly, the board is actively driving a strategy that is positioning us for when those markets emerge from this low price environment. The next slide, I'll let you read that by yourself. This is a bit of corporate overview, but it shows some of the photographs of the three board members. These are board members that are highly credentialed. You probably will know them from other companies, roll their sleeves up and very active in the business. So the slide that you have in front of us here just is meant to just give a very quick snapshot of the project at the asset level. And if you look at the blue picture, which is really a rendition of West Australia, the red star is the location of Parkes Reef, 380 kilometers east of Geraldton, so really close to a very good port, in the heart of a well-known Tier 1 mining jurisdiction, the Mid-Reef region. And most importantly about this project, has mining license granted and has native title arrangements in place with that 250 meters of resource defined to date, with a very likely depth of up to 2 kilometers, potentially beyond that. So a little bit about platinum group metals and PGMs. There's 6 of them in the suite of platinum group metals. It's platinum, palladium, and rhodium are what I tend to call the major metals, and then iridium, osmium, and ruthenium are the minor metals. They're all important. However, platinum, palladium, and rhodium are the better known. The volumes of demand are much higher, and their uses are better known in markets. And of course, platinum, palladium, and rhodium are the ultimate decarbonizers. So these metals have been used, platinum in particular, since the 1970s in auto catalysts to decarbonize the harmful exhaust emissions from the motor vehicle. And although platinum has a number of other uses, it's really the motor vehicle industry that's driving platinum, palladium, and rhodium. We've colored in the 4 of those 6 metals that are present in our body, and that includes iridium. Iridium and platinum, as I hinted at earlier, are going to have an increasingly large role in the green hydrogen economy, in the transition to green hydrogen. And the next slide is what this is all about. It shows on the left-hand side a proton exchange membrane water electrolyzer, which is an incredible piece of technology, which takes water using electricity and breaks that down into hydrogen and oxygen. And then, of course, there's the fuel cell on the right-hand side, which are well known in the use in motor vehicles and stationary applications, which combines hydrogen and oxygen to produce electricity. And iridium and platinum are essential metals in those 2 technologies. So let's move then to a little bit more around the market. And this is a picture around the supply side. Now, I think it's really important to recognize and appreciate that about 85% of PGMs are currently produced out of South Africa and Russia. And if you look at those 2 pie charts on the right-hand side, the top one is the platinum supply breakdown, so 70% or thereabouts from South Africa, add Russia and Zimbabwe, and you're looking at over 90%. And then palladium is split between Russia and South Africa at about 80% levels. You know, I don't need to tell you that these are risky and challenging supply environments. And South Africa in particular, is a difficult environment to operate in. Not only do they have some aging infrastructure there in terms of their mines, their costs are increasing as their mines are deepening. They also got the added complication of electricity and power disruptions. But right at the moment, the projections are that the 4th quartile shafts that are producing PGMs from that region are underwater. In other words, they are supplying product to the market at costs that are above the spot price. And that's precipitating a supply-side response. So if you look if you follow this industry in the market, you'll see that Sibanye-Stillwater, one of the large producers, has announced 2 weeks ago that it's closing down 4 shafts. Impala are doing a similar sort of thing. They're starting to cut labor costs to try and cut their costs. There's rumor that Anglo Platinum, the world's largest PGM player, is following suit, although they haven't yet acknowledged that. So not only is there going to be a supply-side response in response to these tight margins, but also that region is going to find it difficult to expand to react to growth and demand that's coming, largely because of scarce capital and the geopolitical risks. So from a supply side point of view, supply is very inelastic, and there's little upside risk to mine supply going forward, which is a very important aspect to take into account. This next slide, bear with me because there's a lot of richness in that slide, and we'll have to use the theater of the mind to work our way through it. So what we've graphed here over the last 3 years is the price of the three key PGMs. So the red line is the platinum line, and you read the prices on the left-hand side of that graph. The blue is palladium, also the left-hand side, and the yellowy color is rhodium. You read that on the right-hand side. And you'll notice that it's almost a tale of two halves. So you'll see the very high prices for palladium and rhodium in particular through that period of COVID. But in the last year or so, you'll see the price decline. And that's a consequence of a number of major macro events that are playing themselves out in the market at the moment and creating a number of disruptive forces that are at work, but are working themselves through the industry. And a lot of these forces actually started 3 years ago, 4 years ago, back when COVID impacted demand, when recycling reduced supply sources, when South African power supply started to disrupt and erode supply. And of course, there was the instability from the Ukraine war. So during that period, interestingly, prices remained high. And that in that period, a lot of the OEMs were building up defensive stocks. One is a consequence of the risk of supply. And the second one was the anticipated pent-up demand, particularly in the motor vehicle industry, once we were released from the holds of COVID. And of course, that didn't happen. And there are a number of reasons for that. There's ongoing geopolitical tensions that are in the world that are impacting an overhang in the industry. Of course, you know about inflation rate pressures and these macroeconomic uncertainties that are playing themselves out. And this period, of course, will pass. And there's also been a rerouting of metal flows from Russia into markets as a consequence of sanctions or, sanctions that have been applied from the Western world on the Russian metal supply, which is really unbalancing the market. So as a consequence of that, we've seen this massive price decline. Interestingly, in all of that, as we've hinted, automotive and industrial sectors are recovering quite strongly, particularly for platinum. And platinum demand this year is up 28% year on year. And in fact, platinum and all the other PGMs, but platinum in particular, is going to be in a global deficit this year and for the next 5 years of the projections. And the deficit this year is going to be a global record for that metal. So the question that you probably want to ask yourself is, why have the metal prices not recovered? And it's a combination of that uncertainty in the market and also the inventory drawdown. The defensive stocks that were built up during the COVID period are now being drawn down by the OEMs. So they are using those stocks to substitute and subsidize the gap between supply and demand. And of course, once those have run out, and in a very, very supply-constrained environment, you have to ask yourself, what is the metal price going to look like? And we're predicting that that will recover over the next period. If you go to the next slide, you've heard me talk about these 8 payable metals. And the balance of those metals is highly aligned to the mix in the market and the market demand. So those pie charts, if you look on the left-hand graph, for instance, the inner circle in the donut shows the mix of the PGMs, platinum, palladium, and rhodium, a beautifully balanced mix in our ore body. We really, truly have a lovely mix of metals. And of course, the pie chart on the right-hand side shows the overlay of the base metals, the 8 payable metals. Just out of interest, before I move to the next slide, you'll see that middle donut shows the PGM basket price for our metal, for our in-ground metal, back in May 2021, which was just over $3,100 per ounce of in-ground metal. When we looked at that price about a week ago, it was down at 1,200. So you can see that significant decline in prices over the last 12, 18 months or so. And of course, that knowledge that we now have on our ore body has been built up through the efforts of this team over the last 12 to 18 months. And this slide over here, what we show on the slide, across the bottom is time, the influx of time over the last 3 years. We've overlaid on that, the red is our share price, the Podium share price, and then above that, the orange and the blue are the basket metal prices for the 5E PGMs is the orange, and then the blue includes the 8 payable metals. And you'll see the transition of deliverables by the business over time along the bottom. So 3 years ago, this business had a resource of just over 1 million ounces, and that was defined only as the 3E, platinum, palladium, and gold with a little bit of copper. A year later, that had been increased and doubled to about 2.8 million ounces. A year later, which was just towards the end of last year, that had been increased again by double to 6 million ounces. So through the period of time, through drilling and knowledge around the ore body, we have doubled and doubled that resource again. And if you follow the red graph, you'll see the overlay as we have become more sophisticated in terms of the ore body knowledge. That's the addition of palladium and copper about 2.5 years ago, rhodium and iridium knowledge about 2 years ago, and then in the last year or so, as we've unlocked the mineral processing pathway and then identified the depth potential down to 2 kilometers. I think what's really important on this graph is you can see as we have built knowledge in this business and in a very positive price environment, our share price has recovered and it has reacted well, highly leveraged to metal price and also to the knowledge we're building in that business. Of course, in the last 12 months or so, the last 18 months, metal price decline has pulled our share price down in spite of the very good work. And unfortunately, a lot of the very strong messaging around doubling of metal price and that depth potential hasn't been seen and hasn't reflected in our share price. And we're certainly not unique in that. The same impact can be felt in all of our peers. So this picture over here it tracks share prices of our Australian peers and the 4 major producers. So we've got Anglo Platinum and then Sibanye and the others. And you can see we've all ended up in the same place. As a consequence of that basket price declining in the industry by 40% over the last 10 or 11 months, it has impacted the share price of everybody, explorers, developers, and producers. The 2 next slides are the ones that make me sleep well at night, and these are the projections around demand for platinum and palladium. And if you take this first slide and you just focus only on one of the graphs in that slide, and that's the one that's got the blue and the pinky orange bars, that's the demand projections for platinum as produced by the World Platinum Council through to 2040 in the motor vehicle industry. And, what doesn't show on that is that their projections include somewhere between a 30 and a 40% penetration of battery electric vehicles into the new motor vehicle market by 2050. So notwithstanding those very, very extensive battery electric vehicle penetration figures, platinum from motor vehicle industry will have a long demand tail and will continue to be underpinned by the internal combustion engine for at least the next 15 to 20 years and beyond. That picture, interestingly and excitingly, overlays in the sort of pinky orange color the projections of platinum demand from the fuel cell and the hydrogen economy. And you can see that by 2040, and that's the base case projection, we will need as much platinum going into fuel cell applications as are currently going into the internal combustion engine. So it's a doubling of demand over the next 15 years. Of course, the question is, where will that supply come from? And that's part of the thesis for Podium Minerals and West Australia. The bottom picture shows the World Platinum Investment Council's projections on deficit, and you can see that absolute record deficit in 2023, and then projections for the next 5 years as well. So the platinum forecast assumes a very significant battery electric penetration. The fact is that as we stand at the moment, penetration rates are nowhere near 30 to 40%. If those penetration rates drop down to about 15 or 20%, which is what they are at the moment, PGMs will stay in deficit for the foreseeable future. And that's not just platinum. The next picture is the palladium story, a little bit less dramatic, but no less significant. Again, the central picture shows the demand from motor vehicles for palladium. The blue is the internal combustion engine. The brown overlay over that is hybrid vehicles. And you can see the orange or the pink color, which is the battery electric vehicle penetration. And the reason that there's a long tail and that palladium demand is maintained in the motor vehicle industry is because of the other jurisdictions. It's the other jurisdictions outside of China and Japan and Europe that are driving internal combustion engine demand and palladium demand going forward. Just a quick focus on the slide. It's really just on the 2 pie charts. So the middle one is the platinum, palladium, and PGM mix in our ore body. You can see that beautiful balance, around about equal amounts of platinum, palladium with strong showings of rhodium and iridium and some gold in there. And the one to the right of that is the current demand mix for PGMs in the globe. So our ore body mirrors what is currently needed. Of course, as we go into the the energy and the green energy transition, platinum and iridium demand will increase, which makes the demand for ore bodies that are platinum and iridium rich so much stronger and so much richer. And that positions us very, very well. Let's move then to the project level. So you've seen this slide in different forms before. It's not new, but we like it because the left-hand picture just shows a plan view of the 15-kilometer strike length and the ore body overlaid of the Parkes Reef project. And all of those little red dots are the locations of drill holes that we've put down into the ground every 200 meters to get a view of the entire 15-kilometer strike and the 6 million ounces down to the current 250 meters. The picture on the right just shows a section through the ore body. It's a steeply dipping ore body, very amenable to mechanized mining. It's about 15 or 20 meters deep. This next slide shows a slice through the earth down to about 2 kilometers. The orange bits show the location of the drill holes in the current 250 meter deep resource. And the colors are there to show it's higher and lower grade regions, but it shows the continuity of the resource over the current 15 kilometers. If you look very carefully, you'll see 3 lines, one on the left, one in the middle, and the one on the right of that picture. And those are the deeper holes that we put down about a year ago, down to about 500 or 600 meters, which confirmed for us that the ore body projections down to 500 or 600 meters look very similar or the same to the ore body at the 250 meters. What we've shown over there is the additional geophysical and aeromagnetic data that we announced a few months ago, which show that this ore body very likely continues down to depths of at least 2 kilometers. And when you look at that in section and 2D view, the orange and the green and the yellow is the ore body resource down to 250 meters. We've shown the locations of those 3 drill holes. We put a dotted line there. When we go out to drill for further resource extension, it'll probably be down to the next 250 meters. We know that the ore body already exists down at 250 meters. We've actually shown one of the drill results for PRDD003 down at about 500 and something meters. And you can see very interesting intersections there, 11 meters at 3.7. And you refer that to the resource, which is currently a resource of about 1.3 grams a ton. So very interested to see what's happening down at further depth and the grade at further depth. But you can do your own maths around what the resource will probably look like if we double the resource depth. We've done a lot of work, and we've recorded this to the market previously. We've done a lot of work around the mineability of this resource. We have mine indications of how we're going to mine the ore body at the underground and the open cut. And of course, because this ore body has high-grade extensions in the hanging and the footwall, so they're high-grade zones in the hanging and footwall, we have the optionality to mechanize mine the hanging and the footwall as well in narrow mining, which will mean that we can feed a much higher grade to our processing plant. And the processing plant process that we have developed to date is a fairly conventional process. So it's the crush and grind through to the flotation where our recoveries are good. Our mass pull is still high, and we need to work on that some more. Put that concentrate into a hydrometallurgical leach, which is a leach process to recover the PGMs and base metals. And then we've been experimenting with a metal recovery, which will produce a salt, which can go directly into base metal refineries around the world. The focus for us next year is the waste rejection step. That's going to involve us looking at existing technologies around the world to reject more waste to create a sweeter feed into our hydrometallurgical circuit and then enhance the economics of this process. And this slide that you see in front of you really just focuses on what we intend to do in 2024. It's all about expanding that flow sheet to include waste rejection opportunities. It's about improving performance in the flotation and the acid leach. And we want to look at how the high-grade hanging and footwall perform through the process. To date, we've been looking at the bulk underground package, the bulk reef package through our metallurgical process. We want to have a look at how that performs at a high grade with a high-grade ore feed. And most importantly, we're going to need to do some technical drilling early next year because we're kind of running out of sample. We've done such a lot of work that we've used most of the sample, so we need to get some diamond core that will allow us to continue our metallurgical development. Which brings us to the reason that we're all here today, and that is the recently announced renounceable rights issue. We're looking to raise $2 million, That's a very attractive price of 2.5 cents a share. What that means is that for every 9 rights that you have, you'll be able to purchase 2 shares, and there will be a 1-for-2 option that will go along with that. The record date for this capital raise will be Friday, so it's this Friday. The closing date will be 2 weeks thereafter on Friday, the 15th. And we think this is a very attractive opportunity for our shareholders to participate in the business and to fund this exciting development plan that we have for 2024. The next slide gives you a use of funds. I'm not going to go through it in detail, but you can, as you expect, see that all or most of the money that we are raising will go directly into the project. There's a small de minimis amount that may go into working capital, but this is all about putting money into the project, and about half of it will go into that technical drilling program. So moving then on to what's the last slide in this series. There are a number of reasons why I am very bullish and love PGMs. I've had a 28-year love affair with PGMs. My first role that I ever had was with Anglo Platinum back in the early 1990s. And during that time, I've seen a number of market disruption events. And this one is no different. But I remain in love with PGMs for a couple of reasons. And in this instance, it relates to the demand and the supply. The current demand driven by internal combustion engines ensures that there's a long PGM tail. So the demand picture is underpinned by existing markets. Now, there's no systemic problem with our existing markets. In fact, it's a very exciting existing market. But what really gives me a lot of info, a lot of excitement, is the future demand growth, which you can overlay on that through the green hydrogen economy. From a supply side, we've talked about some of the supply challenges, the limited scope to react to demand by the existing suppliers, and the fact that 85% of supply comes from fairly politically precarious countries. We don't suffer from that. We've got a 15-kilometer strike located in a very politically exciting and low-risk WA jurisdiction with a strong mining track record. We've got mining licenses and native title agreements in place, and we've got 8 payable metals that are strongly aligned to where future PGM demand is likely to be, and current demand currently is. The market is disrupting, but it's approaching that inflection point, and when it comes out of that, we have seen before how these metal prices recover, and we will see that again. What's important for us is to continue to leverage off this highly experienced team that we have and make sure that the company is positioned for when those metal prices transition. And that's the focus for us next year. So if I was to leave you with just one last message, it's that this is a business that's highly leveraged to the turnaround in the market, to the turnaround in the metal prices. But of course, overlay on that we have an extensive amount of intrinsic knowledge and intellectual property around our process, around our ore body, that has not been lost, notwithstanding that the share price has reduced. And of course, we've got all that prospectivity in our ore body in terms of further extensions to our resource. So that brings me then to the end of this presentation. I thank you all for your attention. We'd be very, very happy to receive any questions that you may have. We've got our details up on the slide over there, so please feel free to phone myself, or if not myself, Justine, who's our CFO, and we'd be happy to talk to any shareholder. And as I say, this is going to be recorded. It will be up on our website. And we'd really appreciate it if you could let any party know who may want to be interested in the company, or alternatively just in PGMs. Please invite them to have a look at the presentation. Thanks very much for your attention.
Victor, that concludes today's presentation. Please note that a copy of the webinar can be accessed from the company's website from tomorrow. Should you have any queries, please feel free to reach out and contact the company directly. Thank you.